So in the previous video, we created the income statement for Angel's delivery service. So, which financial statement must be created second? That, of course, is the statement of owner's equity. So we're going to use the income statement and the trial balance to create a statement of owner's equity for May. Important, the business started on May 1st, and just a reminder, the first transaction, creatively called Transaction A, occurred on May 2nd. So like all financial statements, we need a three-line heading. The first line is the name of the company, Angel's Delivery Service. The second line is the name of the statement that you're working on, in this case a statement of owner's equity. And then the third line is date related. So we have to figure out, is this a single day or a period of time? Let's review what the statement of owner's equity shows. The statement of owner's equity's formula is bind with an E. Beginning capital plus investments, also called owner contributions, plus net income or minus loss, minus draws, also called withdrawals, equals ending capital. So what this statement is showing is what has happened to capital over the time period. So this third line has to be a period of time. So remember, it's supposed to be for May. So we'll say for the month ended May 31st, 2029. And again, remember the formula is bind with an E. The B stands for beginning capital. So we have to go find the name of the capital account. And if we look at our trial balance, the name of the capital account is Alice Angel, capital. And then how do we say it's the beginning? The beginning of what? It's the beginning of this time period. And the time period is May. So what's the beginning of May? May 1st, 2029. So your label should be Alice Angel, capital, May 1st, 2029. And then we need the capital amount on May 1st. Now remember, the note up above says that the business started May 1st, and the first transaction, which as you may or may not recall was an investment, was on May 2nd. So what was the balance of anything on May 1st? It was 0, because that's when the company started. So the second line in our formula, B-I-N-D-E, the I stands for investments, also called owner contributions. So we'll follow the textbook's formatting and call it owner contribution. If you say owner investment, that's fine, means the same thing. And now here comes the tricky part. How much was the owner contribution or the investment? Did they have any investments? Where would we find the investment? Well, first of all, what account do the investments go into? Is there an investment account? No. As a reminder, our accounting grid shows you that there is no T account for owner investments. They just simply go into the capital account. So then we have to look in the capital account and see if any of the amounts that are in the capital account were investments. So looking at our trial balance, we can see that the balance of the capital account is $40,000. So technically we have to dive deeper to double check to make sure that the $40,000 was from owner investments. So the way to do this is we go back to our ledger in the form of T accounts, and we find the capital account, and we notice there is only one transaction that affected the capital account. It was $40,000 and it increased the capital account. Was that an investment? Well, we should go back to the actual journal entry. Notice it has a label of A. So we need to go back and look at our journal entry for transaction A and double check to see if that was an owner contribution, also called owner investment. So here is the journal transaction for transaction A, which happened on May 2nd. And as you can see, it was an owner investment. So we've double checked and we have confirmed that the $40,000 was an owner investment. So we place that in the far right column. All right, now we can continue with the easier parts. So BINDE, the N stands for net income. So we're going to have the label say net income for May, or you can just say net income, either way. And where do we find the net income? We need to go back and look at our income statement. So how much was net income according to the income statement? $14,700. Then we look at the formatting from our textbook and notice they have an underline showing that we're doing some mathematical operation. In this case, we're adding the three numbers up above that line. So 0 plus 40,000 plus 14,700. And we put the total of 54,700, and there is no label for it. It's just a subtotal. So we'll leave the label blank. And then what's next on our formula? BINDE. The D stands for draws, also called owner withdrawals. And where would we get the owner withdrawals from? We look at the trial balance, and we see that the withdrawals was $88. Now, do we add or subtract these withdrawals? We subtract these withdrawals. So we have to put parentheses. That's since we're doing an official financial statement, instead of doing a minus sign, it's preferable to be more official and put the parentheses to show that this $88 is a negative number and we are subtracting it. So now we're going to subtract the $88 from the 54,700. So we include another dark horizontal line to show that we're doing a mathematical operation, and then we subtract 88 from 54,700, but first we need the label. So again, the formula is bind with an E, beginning capital plus investments plus net income minus draws, and the E stands for ending capital. So what's the name of the capital account? Alice Angel, comma, capital. And what's the end of May? May 31st, 2029. So your label should say Alice Angel, comma, capital, comma, May 31st, comma, 2029. So that's our ending capital. And then we just simply do the math. 54,700 minus $88 gives us $54,612. And since that's the bottom line, we do a double underline for it. Now let's analyze the statement. It's just one thing to plunk in the numbers like a robot, but we should be able to analyze this. So what do you think? First of all, the first question is, what happened to capital during this period? Well, it started with 0 and it ended with 54,612. That's good. So now the big question is, what's the major reason for the huge increase? The major reason was owner contribution, $40,000. So in other words, investments. So the owner did a lot of investments, $40,000, and they also had some nice net income. And the owner is holding withdrawals very, very low, probably kind of unrealistically low if the owner plans on living off this company. But anyway, the bottom line of this analysis of the owner's equity account is it increased substantially, but the main reason it increased was owner contribution, also called owner investment. We would rather have the increase come from net income, but at least they do have a net income and not a net loss. And that's it. In the next video, we'll do the balance sheet.